Hello and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today, on October 5th, 2025, we are diving deep into Litecoin, or LTCUSD, which has been making some serious waves in the market. First, let's cover the mountain of news that's fueling this recent price action. The biggest story is the immense hype surrounding a potential spot Litecoin ETF. While the SEC has remained silent and even missed a decision deadline for Canary Capital's ETF, the fund has now been listed on the DTCC under the ticker LTCC. This is a significant procedural step that often precedes an official launch, fueling strong investor sentiment. In fact, reports suggest that over 80% of investors are betting on a Litecoin ETF approval sometime in 2025. This isn't just retail speculation either. We're seeing major institutional adoption. In a landmark move, MEI Pharma, backed by Titan Partners Group, has committed over $100 million to a dedicated Litecoin treasury. They've even brought Litecoin founder Charlie Lee onto their board, signaling serious long-term conviction. This unprecedented institutional interest has been building since late 2024 when Canary first filed for their ETF. However, the sentiment isn't universally bullish. Some analysts note that recent bullish momentum has cooled off and point to ongoing weakness in the LTC-BTC pair. There are also warnings of a potential sell-the-news event, and a large whale recently deposited a significant amount of LTC to Binance, which can sometimes foreshadow selling pressure. So, we have a classic battle between incredibly strong fundamental news and technical caution. Now let's see how this narrative plays out on the charts, starting with the daily time frame. Looking at the big picture, Litecoin has been on a wild ride over the past year. We saw a massive run-up in late 2024, peaking at nearly $147 in early December. This surge directly corresponds with the initial news of Canary Capital filing for a spot LTC ETF in October 2024, a clear case of the market pricing in future events. Following that peak, LTC entered a brutal bear market for over half a year. The price corrected over 65%, finding a hard bottom around the $50 mark in early August 2025. From that August low, we can see the beginning of a recovery and a period of consolidation, mostly trading in a range between $60 and $95. But the most important action has been happening very recently. Let's zoom into the period from July 2025 to today. Notice this powerful impulse move that began right around mid-July. This aligns perfectly with the news that MEI Pharma was creating its $100 million Litecoin treasury, showing how institutional buying can move the needle. The price jumped from the low $90s to over $113 on that news. After that initial excitement, the price pulled back and spent September in a quiet consolidation phase, building a base for the next move. And that next move began just about a week ago at the end of September. We can see a series of strong, bullish green candles breaking out of that September range. This surge of over 16% brought the price smashing through a critical resistance zone. Let's focus on this breakout more closely. The $112 to $115 area was a major point of resistance, clearly visible as a ceiling in late July and again in August. News outlets specifically highlighted this zone as a key level to watch. The price has decisively closed above this level for the past 3 days, which is a very bullish technical signal. This breakout effectively turns that old resistance into new support. As long as Litecoin holds above this $112 to $115 zone, the short-term outlook remains firmly bullish. The volume during this breakout has been significant, confirming the strength of the move. The current price is hovering just above $120, seeming to consolidate after the initial push higher. Now let's switch to the 1-hour chart to get a better look at the current price action. On this shorter time frame, we can see the price is forming a tight consolidation pattern right around the $120 mark. This is healthy price action after a strong upward move, suggesting the market is taking a breather before deciding on the next direction. Bulls want to see this consolidation hold and for the price to use this area as a launch pad for the next leg up. A break below the recent swing low around $117 could signal a deeper short-term pullback. The immediate support on this time frame appears to be around $118, with the larger support zone still back at $112 to $115. Drilling down even further to the 15-minute chart, we can see the price action in granular detail. The last several hours have been characterized by choppy, sideways movement. Volume has tapered off, which is typical during a consolidation phase. For day traders, a break above the local high of around $121 could signal a continuation of the uptrend. Conversely, a break below the local support around $119.50 could lead to a quick test of lower levels. This time frame is most useful for confirming the direction of the breakout from the hourly consolidation. Pulling back out to the daily chart, let's talk about the path forward. For the bullish case, everything is aligning almost perfectly. We have powerful fundamental news with the ETF and institutional adoption, providing a strong narrative. Technically, we have a confirmed breakout above a multi-month resistance level on high volume. The next logical target for bulls would be the resistance level seen around $130, which was a ceiling mentioned in recent news reports. A break above $130 would open the door to testing the $135 to $140 resistance zone from the December 2024 rally. Ultimately, a full retest of the prior high near $147 is well within the realm of possibility if this momentum continues. Now, for the bearish case, we must consider the possibility that this is a buy the rumor, sell the news scenario. The market may have already priced in an ETF approval, and any official announcement could trigger profit-taking. The whale deposit to Binance is a tangible warning sign that large players might be looking to sell into this strength. A failure to hold the current levels could see a swift retest of the breakout zone at $112 to $115. If that support level breaks, it would be a significant victory for the bears. A break below $112 would invalidate the bullish breakout and could send the price tumbling back towards the psychological support at $100. A catastrophic failure could even lead to a retest of the lows from September around $98. So, let's recap the key levels and potential scenarios to watch for. Your most critical support level to watch is the zone between $112 and $115. As long as we are above this, the bulls are in control in the short to medium term. Below that, key support lies at $100. On the upside, the first minor resistance is the current consolidation area around $120 to $121. The first major resistance target is $130, followed by the zone from $135 to $140. The ultimate bullish target in this cycle would be the previous high near $147. Now for some unbiased predictions. I believe there is a 70% probability that we will test the $130 resistance level within the next few weeks. This is based on the strength of the breakout and the overwhelming positive sentiment from the news cycle. This likelihood would be reinforced if the price can firmly break and hold above $122 on the daily chart. I would assign a 30% probability to a failure scenario where we break down and retest the $112 support. This scenario becomes more likely if we see a broad crypto market downturn or if negative news, like an outright ETF denial, were to surface unexpectedly. The main thing to look for moving forward will be any official announcements from the SEC regarding the Litecoin ETF. Also, keep a close eye on trading volume. We want to see volume increase on upward moves and decrease on pullbacks to confirm the health of this trend. That's our in-depth analysis of LTCUSD. Thank you for joining us on Explain the Charts. Please remember, this video is for informational purposes only and is not financial advice. Always do your own research and make investment decisions based on your own risk tolerance.